Well, the real estate market is changing, and we are here to keep you up to date on what the heck is going on. Hello there, this is Slav, Polinski Homes with Properties in Downers Grove. And with me today is Keith Hoffman, mortgage banker for Draper & Kramer Mortgage Corporation. Good morning, Keith. How are you?
Excellent, excellent. Glad to be here.
Fantastic. I'm glad to have you here, and I'm glad for you to share your experience with us. But first of all, just want to let you know we are shooting here at Wasabi Restaurant in downtown Downers Grove. If you've been here, you know how special this place is. The menu is incredible. The atmosphere is phenomenal. And if you haven't been here, you have to try it out. And we're gonna have lunch as soon as we're done with the video. And one of the special things about this place is Charlie Kim has brought in live entertainment here on many weekends, and it's so fun. They bring in some great performers. So it's a great way to get out, check out downtown Downers Grove, and have a great meal, have great cocktails at Wasabi in downtown Downers Grove.
My favorite.
We're experiencing a lot of changes in the real estate market. There were predictions earlier in the year that really haven't panned out. One of the things was the Fed said that this whole inflation thing was going to be transitory, right? In other words, it wasn't going to last. It was going to come through, it was going to leave, and everything would be good. However, we know that's not the case, don't we?
Yes, we do.
So as a result, we're seeing, number one, the average person spending more per month just to live. And on top of that, we've been seeing an increase in interest rates for borrowing to purchase a home, haven't we?
Oh, that's an understatement. What I found is it's been a little difficult. Began this year about 3%. And we are over 7% right now. So It really hurts certain buyers, but we have some alternatives that we can look at to help them out.
Yeah, sure. And what I heard, and correct me if I'm wrong, you might have received some different information. I know we're both kind of watching the news all the time, right? Is that interest rates may go up as high as 8% before they start coming down again. Are you hearing the same thing?
I don't want to say. Well, you know what? We see a lot of things going back and forth.
Sure.
And I really do see interest rates potentially going up a little.
Mm-hmm.
I don't know that I would give it that 8% mark, but we do feel that it's going to bounce back and forth, and hopefully, potentially next year, we'll see some lower rates.
Right, exactly. That's what I'm hearing as well. And of course, it has affected the real estate market. There are buyers who decided to wait just because their monthly payment is something they were not comfortable with. However, there are still buyers out there because they need to find a home, and there are sellers out there because they need to make a move. No matter what's going on in the economy, you're always going to have people buying and selling homes. Now, 7-8%, is that something to worry about? I don't think so, because yes, compared to 3%, it's a little bit of a sticker shock, right? However, when I bought my first home at 12%, we needed a house, we bought it, and that was the interest rate at the time. And what we did is, as soon as we were able to refinance, our first refi was at 8%. But in the meantime, home values continue to go up. We were paying monthly payments towards the principal, and we were building up equity. So when we made the move to a bigger house, we had the foundation to do that. And today, sure, we're experiencing 3%, but that's the ups and downs of the real estate market. And I think people should just have more of a long-term view. If this is a home that you're going to stay in for a few years, rather than that short, what's going on right now. What do you think?
Well, I agree. I think, obviously you have to afford your payment, so you have to feel comfortable with that. That's the number one thing. But what I'm seeing is that people are able to do adjustable mortgages at this time of the year. I'd say this time of year, this economy, and they're taking an adjustable, so it's fixed for 3 years or 5 years or 7 years or 10 years, and then they can refinance down the road. It'll make them feel a little more comfortable. It's a lower interest rate.
Sure.
But yet they can still get into the house and continually start growing their wealth by increasing the value of their home.
Yeah, fantastic. So what is the approximate difference in interest rates between the different adjustable mortgages that you offer and what's fixed?
That's a very difficult question because everything is based on percentage down, whether it's a purchase, what your credit scores are. Even if it's 1%, it's going to be a lower amount that you're able to get.
Right.
Of course, jumbo mortgages are different than conforming mortgages, so we are going to see a little difference in that at that point. But I think right now, if you said 1%, that's a lot less than you're going to pay for a 30-year fixed mortgage.
Yeah, absolutely, and that makes a big difference in the monthly payment, right?
Big difference.
Yeah.
Big difference.
So thank you for that information. And what other options are out there for buyers right now? Creative options to keep their monthly payment lower while the interest rates are where they are before they come down again.
Well, the one thing that we are really finding, are other than adjustable mortgages, is that people are getting their buy downs. So they're actually doing a buy down. It's a temporary buy down. So what they're doing is temporarily buying down for the first 2 years the interest rate. By doing that, you're actually prepaying for it. It is a cost to you, which is tax deductible, but yet we're going to get into a situation where it's going to be lower for the next year and then the next year after that. So when you're looking at something like, for instance, if interest rates were 7%, you might get 5% the first year, 6% the second year, and then 7% for the rest of the continued time.
Sure, okay.
Really helps a lot on your payment, and you can look at refinancing at any time down the road.
Right, so if you start a little bit lower, and in the meantime, while you're gradually stepping up, the interest rates do drop, you can refinance.
Yeah, and what we found is, especially in this market, I know it's a difficult market, and I know that sellers do not want to pay a lot of things for buyers. But if they can come in with a decent offer and ask the seller to pay 2 points or something like that towards this, then they could be paying their buy down, and they're not going to be concerned with extra money that they have to come in with.
That makes sense, and we're seeing some of the things we saw several years ago coming back into play, such as home-to-sell contingencies, home-to-close contingencies. I imagine we're going to start seeing some, credit to the buyers as well, which was very common before a couple years ago. One thing, keep in mind for sellers and buyers is, real estate is. It's only so much they make in this world, right? I know it's a very important decision, financial decision, but always think about the long term. If you buy real estate, historically, it has always, over time, increased in value.
It sure has, and I'll tell you, the key thing is to use a very, very good real estate agent like Slav to make sure that you're going to get the best deal and the best offer accepted. And I think that's a really important thing right now. And by the way, you don't pay for it. The seller pays his commissions.
That's right. Thank you for that. And I really appreciate your insights today. I think right now, with everything that's changing, buyers and sellers are experiencing things that, number one, they may have not experienced in many years, they have forgotten about, or they not have experienced at all. So it's important that we keep the communication open and keep informing them so they know how to make the best decision for themselves.
Absolutely. And I appreciate it, and I'm looking forward to some good sushi.
Absolutely. Let's get that done. All right. This is Slav Polinski Homes with Keith Hoffman, Draper and Kramer. You make it a great day.